And if you're not following all the polls and the poll aggregators, they're pretty much putting this election at a coin flip or something close to it. There's just not a lot we can glean from it. But yes, the president of Heritage Capital LLC, Paul Schatz, he has a model that has, I believe, not gotten the presidential election wrong since, what, 1992?
92, swung and missed. Yep.
Swung and missed. That's all right. Do you want to start with the top line here, and then who it's predicting, and then we'll get into why?
So interesting. So I run the model every single day in the last week because I use so much recent. This is not about polls or opinions or your feelings.
Nothing qualitative.
No policy. No.
Yeah.
This is strictly about. I use recent economic data.
Yep.
Which you can't refute or argue with. And then I also use 3 different time series of stock market data. I can't tell you really for sure why it works. I can just tell you that, listen, is it going to be right this year? I have no idea. In 2016, I said it chose Trump. I didn't see an electoral path for Trump, but the model was right. So right now, I ran it last night, and the model is skewed towards Kamala Harris winning.
How much? Because you have said in the past it was weakly predicting Trump, but strongly predicting Biden in 2020.
Right, and it moves because we're now in that last couple of days, and stock market does move. So a week ago, it was a strong Kamala Harris. We had Friday's unemployment data was weaker than expected, so that gives Trump a little bit extra. The stock market performance is moving all over the place. So right now, the model says Kamala Harris is the next president. It's close, but it's not razor thin at this point.
Okay. All right. What are the actual markets doing right now the day before election? Do they sort of price in anything? I mean, I don't know what you can price in. It's all speculative.
It is, but markets have an amazing way, especially the stock market, of forecasting future growth, future issues in the current. So right now, the stock market is and has been forecasting shared power. And I think clients ask me all year long about the election. Elections have absolutely no impact on markets or economy until Halloween. So right now, here's what the market says. If we don't care who wins, who loses, as long as there's shared power, because it requires compromise.
Right.
Clients ask me what's best for my money. Without a doubt, I'm not your ethical, moral election compass, but for your portfolio, the best thing is that there is shared power because the tax cuts from 2017 largely expire in 2025. There's going to be an enormous amount of political jockeying in Congress. Shared power forces both sides to compromise for the good of the people.
All right. What about individual sectors? Which ones would benefit more from a Trump presidency? Which ones would benefit more from a Harris presidency?
So starting from the top down, and you look at it like this, very counterintuitively, the bond market's worried about Trump the most because the scores of his economic plan, which are not going to happen anyway, but the scores of his plan adding to the debt and deficit are worse than her plan. So bonds don't like Trump. Stocks like Trump a little more because his plan is to lower regulation. Drill, baby, drill. And energy. On the Harris side, we know that things like solar power and alternative energy, that's a big plus for the Democrats, not so much Republicans. So that's a check in her box. Anything with lower regulation, things like biotechnology, energy, that's going to score on the Trump side. And then cryptocurrencies definitely score. I mean, Trump became this cryptocurrency candidate, and then Kamala Harris jumped on the bandwagon late. But the cryptocurrency folks, because he wants to have a national reserve of Bitcoin or cryptocurrency, skew more towards Trump.
I want to ask you about your model one more thing. Last question, right? You're not looking at qualitative factors, feels what people are thinking.
That's right.
But that's exactly what decides the election. And I've noticed in the past, usually if you're looking at how good the economy is and how good people think the economy is, generally they've tracked very well until recently. They seem like they have never diverged more, where macroeconomically all the indicators are that the economy is good, yet people think we're in a recession. Is that bad news for your model?
And every time I run this, I say, what am I missing? What are my concerns? Here, there are 2 concerns today. Number one is that you've got 65 million early voting, right? I don't have any way to model that. It's never happened before.
Yes. On
the economy side, it's fascinating. Inflation is the biggest concern. Before Joe Biden came in, it was under 2, spiked to 9, now it's 2.5. So inflation has been coming down significantly, but to your point, many people don't feel that way
because they
prices,
anchor on prices. Yeah.
Right, because inflation doesn't equal the cost of living. It's
Yes.
the increase or decrease. You're right. We're going to listen. If the model's right, sheep likely wins. We'll see what happens to the markets today and tomorrow. But there's certainly a factor of the economy that I have not been able to quantify. Inflation hasn't popped since the early 80s.
Yeah. We'll see. Okay, so there you have it. At least you're getting out here the day before. And
Absolutely.
not just doing post facto here saying, hey, my model picked Harris. So
Yep.
it is picking Harris, just not as strongly as it was maybe a week ago.
That's right. And listen, I'll come back tomorrow or on Wednesday and do it mea culpa, or we'll celebrate.
Yeah, we'll find out one way or the other. Paul Schatz,
Thanks.
good to see you again,
I
buddy.
appreciate it.